Let me now bring on board Darshan Hiranandani, CEO of Hiranandani Group, and Renu Baid, Vice President Institutional Research with IIFL Institutional Equities, to talk about this entire data center mega trend which has started. Obviously, we are consuming more data. Data needs to be stored somewhere. Data storage can be done in the cloud stroke data storage format. But will this be a very big mega trend for next couple of years? Darshan, let me start with you. Now, we've spoken this mega trend of creating data centers and investing in the data centers right now, because the data consumption and the data storage as an industry is going to explode. Let's take the conversation forward. How large do you think the growth is going to be? And do you think somewhere because of COVID, the growth button has been reset?
Well, I think COVID has only accelerated the trend that was already there. The cloudification trend has seen huge success in developed markets. And ultimately, the story is one of efficiency and value. So, going to a data center means that your own computing needs are served in a more energy efficient, yet extremely reliable and redundant manner. Hence, you've seen the acceleration. The second thing is, a lot of companies want to convert their CapEx into OpEx. So they've been consuming what we now call everything as a service, whether it's infrastructure as a service, whether it's software as a service, whether it's servers as cloud computing hardware as a service, and all trying to bundle it and put it into one umbrella. And if you think about the market, the cloud infrastructure market, in 2021 was about $4.5 billion. And that's expected to go to probably $14 billion by 2025. So it's not just about construction of data centers. That's a big opportunity, but even all the stuff that goes into the data centers, whether it's the services bit or whether it's the servers bit, all of that is going to be a big opportunity as well.
Okay, so clearly spotting, of course, the way forward there, as you clearly outlined on that front. Darshan, if we take a look, what is a typical capex for a data center? How does the network and connectivity work? I mean, just take us through a little bit into what it involves. And you've clearly said that there is an opportunity, but to really understand, of course, the idea behind it, the vision going forward, I wanted to get a little bit more detail on really, what it takes to set up a data center.
Okay, sure. So basically, the way data centers work is you're selling energy and you're selling cloud computing. So we compute it in the form of energy. So as an example, a 50 megawatt or a 30 megawatt data center will take a capex of about, give or take, 50 to 60 crores per megawatt, depending on the cost of land. So let's say India this year, I assume, just our group, we have one 30 megawatt data center up in Navi Mumbai. That cost us, by the time it's fully fitted out, will cost us about 1,800 crores. We've got another one in Delhi, which is again about 30 megawatts, which will be ready by July next year. That will be the other similar number that will be in place. In terms of, so I think a thumb rule, 50 to 60 crores a megawatt is the data center space. Another, I'd say 150 crores a megawatt is the cost of putting servers into those data centers. So if you think about it, all the other stuff that goes into it, so you're looking at almost 200 crores a megawatt that will continue to be invested and put into this space. So the opportunity remains big. In terms of the key bits of infrastructure, of course, getting the power connectivity in place, making sure you've got all the internet exchanges in your data center, because the more connectivity you create, it reduces what's called latency. Latency is the delay between the time you hit your Google search and the time it gives you the reply. Gives you a reply. So it's the response time of the data moving from one point to the other. And the lower latency we create a faster network. So it's all about scale, energy efficiency, and speed in the hyperscale data center market. And of course, now there is another market which is also developing, which is the edge data center market, which we think will have its own different value proposition, especially given the expansion of video, sort of whether it is your YouTubes and Twitter videos and TikTok videos and whatever else is going on, your Netflixes of the world, they all want to be in, they need this last mile edge data center to accelerate themselves.
Okay. Renu, let me, bring you in on this and understand how the capital goods space is getting a boost really from the data center business, and how you see companies looking to capitalize on this growth.
Yeah, thank you, and good morning, everyone. So when we look at the data center market for the cap goods space, broadly on a cost structure, thumb rule basis, the way we look at it is X of land and civil work, the construction and the MEP activities almost constitute 65% of the data center cost, which can vary anywhere between 26 to 38 crores per megawatt. And what really goes into in terms of various key large equipment and components, you have a backup genset which gets into it, which constitutes 10% of the cost. You have components like UPS and battery solutions, which are similar in terms of cost structures. Now, since data centers don't involve people, they largely include servers which are sitting in the building space there. They generate a lot of heat and energy. So HVAC systems are extremely important, and they constitute almost 20% of the cost of a data center. And these are highly specialized DC grade chillers and precision air conditioning, which is required. And most of these equipments in the country are not manufactured. They're largely imported today. Or you have players like Mitsubishi, Trane, Stools, which is a German company, Schneider, or Emerson Group company like Vetri, who have been supplying equipment. So the EPC part of the business could be done by companies like Blue Star Voltas, which involves ducting, piping. But the main chillers and the heart of the equipment here is all imported. Similarly, when we look at the genset part of the opportunity, largely it's only two companies who have almost 85-90% of the share. That's Cummins, which have 70%, and Perkins or Caterpillar, they have another 15%. At least most of the 20 to 50 kVA gensets which are used are domestically manufactured, but for large hyperscale data centers, which at times require more than 3,000 kVA gensets, are imported from overseas. But a large pie in terms of value-wise, if we look, is the electrical part of it, because it involves energy. So you have substations, which are transformers, GIS switchgears. You have cables, which are a combination of high voltage and low voltage cables here. Bus bars, raised floorings, etc. So when we look at the electrical part of the business, that is a space where you have companies like ABB, Siemens come into the picture. When it comes to cables, high voltage cables, you have KEI, Polycab coming in. And when we look at the overall HVAC and the other EPC requirements, this is where you have domestic companies like L&T, Tata Projects, or Shapoorji coming in. So there are not too many EPC companies who have been operating in this space because the design engineering required is extremely specialized. Though it seems to be just another form of reality, just like you have commercial residential, but it is very specialized in terms of design engineering requirements and the level of energy efficiency requirements here. And the last leg of the opportunity is on the building management solution side, which is essentially building automation, firefighting solutions, security and surveillance. Which is where you have companies like Honeywell leading, followed by Siemens in the space. So overall, if we see this opportunity of data centers is significantly large. The current installed base in the country is barely about 600 megawatt. And given the large plans of direct players as well as third-party companies who are aspiring to set up large data center installed base, we are looking at nearly 2 gigawatt of capacity addition over the next 4 to 5 years. So which essentially implies almost $9 to $10 billion of incremental capex coming in the next 4 years until 2025. So I think this is where we see opportunities coming up for electrical companies who are doing EPC activities as well as supplying equipment for this segment of the market. And mind you, when we look at other segments which are very price sensitive and customers tend to squeeze out the contractors or equipment supplies on cost, here the price is important because that forms a cost, but then quality of the equipment is extremely important. That determines the reliability of the power and the energy requirement in the DC. And which is where companies who have good market share in this segment tend to bite out the install base because of very strong and high recurring aftermarket services that they get from this type of customer.
Quite interesting. Renu, you've talked about a plethora of companies which stand to benefit as we see more and more data centers coming in. We've already seen about $9 billion worth of investments which have been announced in the last 18 to 24 months. Do you think that this is going to be one space which is going to see further and further investments coming in? For instance, even Reliance and Adani groups have shown interest in setting up data centers.
Yeah, I think investments in this segment will significantly step up. One will have two types of customer bases. You will have direct players like Amazon who will want to invest in their own data centers. But at the same time, there would be companies like Microsoft who don't want to invest their own DCs, but they would prefer third-party DCs here. So a lot of investor base or third-party DCs will see growth. So apart from your traditional players like Nextra or NetMagic in this space, we have seen say, for example, the Hiranandani Group. Companies like L&T themselves who have been into EPC, they are planning to set up a range of data centers in the southern market. Similarly, companies like Techno Electric, who typically have been into only EPC activities and T&D assets, they are planning almost 250-300 megawatt of data centers to be operated on a third-party basis. So I think this is one space where, because of data localization and huge consumption of data, these kind of capex are essential. So you can't do away with it. And given the kind of specialized requirement and attractive returns that one earns on these investments, so I think DCs as a segment will continue to be a significant growth driver. And for companies on the capital goods side, it would be one of the important drivers that we have seen and should continue to lead growth across most of the other verticals.
Okay, Darshan, hi, morning, Avan joining in, and just want to take off on that point because we have a data center capacity of about 650 megawatts. Europe is more than 10 times the size at about 8,500 megawatts, and although we have a very strong internet user base in India at about 700 million versus 400 million in what we've seen in Europe, and as Renu was also talking about this data localization being a big growth driver, what kind of a potential do we have here vis-a-vis the kind of global growth we've witnessed in data centers?
Sorry, Avan, question for Renu or me?
Yes, that was for you, Darshan.
Okay, sure. So basically, I mean, Renu said that next 5 years she expects 2,000 megawatts of demand to come in. I think that that's probably going to be closer to 2,500 to 3,000 megawatts. Just given the when you put in the factors like what people don't realize is that there's 2,000 to 3,000 megawatts of data center capacity lying in people's offices today, and that thing is a white elephant. It costs you a huge amount of money. It's energy inefficient. So basically, you're paying Rolls-Royce prices for a Suzuki product when you put a data center in your office. What you come when you go to a third-party data center, especially like a uptime rated tier 4 facility, you're actually getting a Rolls-Royce product, but you're only paying a Toyota price. And as people have to go through their life cycles in their own IT refreshes, as they get more comfortable, that space, 2,000 to 3,000 megawatts, will migrate out. Separately, new demand coming in from a whole host of internet users. Thirdly, there is data line overseas, which is adding to the localization pressure. Fourthly, which we've not talked about, is government. Government is digitizing at a crazy pace. Whether we started off with UID, with our Aadhaar cards, and now we are talking about digitizing health. We're talking about digitizing ration cards. We're talking about digitizing all services. We've not talked about smart government. We've not talked about the fact that something as simple as a Supreme Court order that says every police station in India, every inch of it should be video camera recorded, archived, kept. I mean, we're talking about a huge number of different factors that will be there. So the demand that we're seeing is, if we're saying that a single city of a single area in Virginia alone absorbed 350 megawatts just last year. Okay, that's just a single place in 1 year. We're talking about all of India, who's so far behind on the curve that really needs to just bring in grade A, high quality data centers, provide that value, and we think the uptick will be there.
Lots of opportunity to be witnessed, and that needs to really be capitalized on within the data center space. It's been good having you both on board, Darshan as well as Renu. Thanks so much for joining in and giving us a sense as to what an opportunity this presents for the company as well as for individual capital goods stocks.